The game is the game. And you have to play the game. So, okay, so maybe you don't have thousands to invest. I've seen many, many people in markets like crypto go from $500 to $500,000. Now, there's a lot of people who don't either, but all I'm saying is the opportunity is there. You don't need to bet your house. You don't need to have huge savings. You just need to focus on what you're doing, understand how to manage risks a bit, and how to look for opportunities. And it's the self-teaching is, how do I become that guy who's got a $500,000 portfolio, considering I've only got $500 today or $1,000 today?
Is that possible still?
Yeah, very much so.
Haven't I missed the boat?
No.
The opportunity is already here. You haven't missed the boat. Play the game right, and you could even turn $500 into $500,000. That's the latest message out from Real Vision's CEO, Raoul Pal. In a recent interview, Raoul Pal lays out a harsh truth. The American dream is slipping away for most people. With wages stagnating and housing costs skyrocketing, many millennials are trapped in a cycle of debt and limited opportunities. But as the modern world faces countless economic challenges, Pal suggests there's hope, and it could lie in the explosive potential of speculative investments like meme coins, where the betting game isn't just about assets, but about capturing viral attention. Make sure to stick around until the end of the video, as Raoul Pal reveals why meme coins and crypto could be your ticket to the future. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free, and you can always change your mind. Now here's Raoul Pal with his latest crypto outlook.
Wages in real terms, adjusted for inflation, haven't gone up for decades. So nobody's getting richer. If you're an American, you have this powerful meme, which is the American dream. But that is not a reality for most. The reality is you grind it out. Your savings are not worth what you thought they'd be. This whole promise of your pension and swanning around on a cruise ship around the Caribbean when you're older, living in a nice house, none of that is true. And it's because wages haven't gone up. So, okay, so let's cut to somebody who's in their 30s now, because this is the really important cohort, I think, for this. They can't afford to buy a house. If I go back to when I was 30, I bought a house in London, and it was a nice place in a good area, and it was 3.5 times salary. Yes, I was in finance. I was earning a high salary. You can't buy anything for 3.5 times your salary. Now that same place, if I took the same kind of young investment banker salary, is probably 8 or 10. So it's triple in how expensive it is to just buy your first house. So what is a house? Firstly, it's your quality of life, particularly, in England, the US, we're home buyers. We think of our home as our castle. It's like the thing that solidifies our security. But if you're in Germany, for example, they rent. But if we think about the mindset of owning a house, it's an asset that you can then pass on, or you can sell if you need to. And an asset is really a future savings plan. It's something you save now that in the future you can consume, you can buy stuff with. But what you're doing is, for the average 35-year-old, the average millennial is 36 years old. They can't afford to buy the house. So therefore, their future self is poorer. If they think of how much of the stock market they can buy less with their money. They have less saving. They've got debts from university. So they don't have the ability to get out of this trap. And then what we are finding is, because of this, they're having to live with other people into their 30s. They don't have kids, and they don't get, and these numbers have collapsed since 1983. You've seen these numbers come down from people living on their own. So you could get your job, get yourself an apartment, has gone from 80% to 62%. You're seeing the marriage rate halve. You're seeing the home ownership rate go from 50% to 30%. These are all expressions of the same problem, which is people know their future is fucked, and they can feel it. They have a sense of desperation. You see then the same cohort of kids in their 30s doing 2 jobs, 3 jobs, 4 jobs. That's not because they want to. Nobody wants to work 12-hour days, 7 days a week. It's because they have. And their parents, the baby boomers, who are in their 70s and retiring, never had that. They were the richest generation the world had ever seen. So this is the first generation that won't be as rich as their parent. And that's a weird thing, because we're all used to human progress, the American dream. If the American dream is, well, you'll never be as wealthy as your parents, and they were middle-class people, and I'm now less well off than them. That's kind of fun.
According to Dennis Porter, co-founder of the Satoshi Action Fund, with Trump's victory, the anti-Bitcoin movement in the United States has come to an end. He predicts that the US will become the most pro-Bitcoin nation in the world. In an op-ed discussing the presidential win, Porter noted how the cryptocurrency community has largely backed Trump over Harris. The founders of major US crypto exchanges, including Gemini and Kraken, publicly endorsed Trump, donating millions to back him as the only pro-crypto candidate. Notable figures supporting Trump's campaign include Cardano founder Charles Hoskinson, BitGo CEO Mike Daly, Tron founder Justin Sun, and Bitcoin Foundation founder Charlie Shrem. Amid growing optimism over Trump's election win, the crypto market has reacted strongly, with Bitcoin surging past its previous highs and briefly hitting $75,000 on November 6th. With the first Bitcoin-friendly president heading to the White House, it's no surprise we saw a new all-time high. According to Bitcoin influencer Anthony Pompliano on X, how do you feel about large crypto figures publicly endorsing a political candidate? Does it change your view on their credibility? Let us know in the comments. Now let's go back to Raoul Pal as he discusses how certain opportunities could help solve people's financial problems.
It's happening again right now in meme coins. This is fascinating. People watching this will go, what a bunch of nonsense. These are coins, tokens, we'll talk about blockchain and this later, but these are investments based on a meme.
A joke.
A joke. Something that grabs attention on the internet. And you can bet on those. Well, what is that? That's about betting on attention itself. If you think about a business like Facebook or Google or any of these, Twitter, they're all based on attention. And now we can bet on attention. Do people find that funny? Are they going to find it funny in 6 months' time or 6 weeks' time? And we can bet on this stuff. Okay, this is the super speculative end, but it's also very cultural. It's not about investment bankers. It's not about gatekeepers. It's about you pitting yourself thinking, is this going to catch on viral? And if it is it going to grow big? Now, some of those might do 1,000x in 6 months. Now, 99% go to zero. But all I'm saying is returns are there, and then you've got different levels of return. If we look at Bitcoin, well, actually, let's compare it. The S&P 500, and this will be an important number later.
What's the S&P 500?
That's the US stock market. It's the broadest measure of the stock market, and you can buy shares in it. Now, that grows at about 10% a year, 11% a year. So let's imagine you've got your $1,000. Well, 11% a year, it's going to take you a fucking long time to make any money, right? So it is not worth your time. The financial advisors will say, yes, you must do this, start now. I'm like, I'm sorry, it's just not going to change your life. Okay, then we go to technology stocks. NASDAQ does about 18% a year. Okay, that's starting to add up because these numbers compound after a while. You know, it goes from 1,000 to 1,200, and then, it's another 20% on top of that, 20%. These numbers add up fast. Bitcoin, since 2011, been 145% a year, even with it falling 80% 3 times in the middle of that. So 145% a year, as long as you're in it long enough, okay, now that's really starting to pay off. And then as you get slightly more speculative, I take a bit more risk in things, well, the returns go up, but they become riskier. So once you start moving into that world, okay, this is a whole different world now. Now the guy with $1,000 can get rich. People think of houses as like an asset, but in the end, you barely ever will sell your house to take the money out. You might downsize later in life. If absolutely needed, you might sell it. But generally speaking, your house is the lifestyle bank. Now, that is super important. And I think it is the most important trade of all, is the lifestyle bank. So what do you do this all for? You want lifestyle. So do you sacrifice your future self having more money by having a house and having security earlier? I would argue those days are gone.
What do you mean?
So I could do it because it was 3 times income.
Yeah.
So a house was not expensive for me. So I could start paying it off a bit sooner, and it became not a big deal. But now your mortgage is likely a huge amount versus your income. You'll spend the rest of your life paying it off, and most of the time you're just paying off the interest. So you're not getting anywhere. You don't own that house. Anything goes wrong, the bank takes it away from you. So you've got to get more control of your life. And that is by having savings that are growing. Then you can make the choice, Let's say that example of the person gone from $1,000 to $500,000. Maybe en route, they say, well, I'm going to take some money off the table and put it in my lifestyle bank, and I'm going to buy a house. That's what I've done my whole career. And I find the lifestyle bank, that's the reward. Because now it's like, okay, nobody can take my house away.
To wrap things up, Raoul Pal acknowledges the tough reality that many millennials face today. Stagnant wages, sky-high housing costs, and mounting student debt have made it harder than ever to achieve the American dream. But rather than dwell on the challenges, Raoul encourages us to focus on the future and leave an open eye for the exciting opportunities in speculative investments like meme coins. Despite the risks, Pal sees these unconventional assets as a way for people to tap into the power of viral attention and create wealth in new, innovative ways. As traditional paths to financial security, like home ownership and pensions, become less attainable, he urges a shift in mindset because, to him, the potential for massive returns is still within reach. With the right moves, it's not just about surviving but thriving in a rapidly changing world. The future may look uncertain, but for those willing to take calculated risks, it's filled with promise. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.